Right. So today we're taking a deep dive into Rocket Lab USA.
Okay.
Ticker symbol RKLB.
Right.
I think this is really interesting. You flagged this article from the Motley Fool, and it really digs into, the recent performance of their stock,
Yeah.
which has seen a pretty significant drop, like 40%,
Right.
after a period of, really dramatic growth. And so
Yep.
what we're trying to figure out today is, does this dip represent a buying opportunity?
Absolutely.
So we want to kind of break down
Yeah.
what's driving all this volatility and really pinpoint
Yeah.
the key considerations for, informed listeners like yourself.
I think it's always a fascinating case study when you see a company experience this kind of dramatic shift in how the market is perceiving them.
Yeah.
And I think that the Motley Fool piece, really lays out the key elements that we need to understand here.
Okay, so let's unpack this.
Yep.
The article, like right off the bat, grabs your attention because it highlights just the magnitude of Rocket Lab's stock surge. It went from around $4 last spring, so spring 2024, to over $30 by January of this year.
Wow.
So that's more than a 7-fold increase in less than a year.
Yeah.
So what was driving that kind of like intense optimism?
Well, I think what was really interesting about that rapid ascent was the narrative that was starting to take hold.
Okay.
The market was becoming increasingly enthusiastic about Rocket Lab, and I think for good reason, they were demonstrating this consistent progress with the rocket launches. They were proving their reliability.
Right.
But then beyond that, they were articulating this vision of becoming what the article calls an end-to-end space economy platform.
Right.
And that was really, I think, what got people excited, that was positioning them as a serious contender and almost, drawing these comparisons to, giant like SpaceX.
Right. And then the article pivots to this, recent change in sentiment, this move towards a more cautious outlook.
Yeah.
And it seems that, a significant part of that has to do with potential delays with their larger, more powerful rocket. Yes.
The Neutron and analysts, specifically those at Bleecker Street Capital, are suggesting that 2025 target for the Neutron's first launch may be overly ambitious.
Uh-huh.
And that it could slip into 2026 or even 2027.
Right. Yeah, I think if we connect this to the bigger picture,
Yeah.
you see just how much, potential can actually influence a stock's valuation, especially when you're talking about companies in these high-growth, innovative sectors.
Yeah.
And the anticipation surrounding Neutron with its promise of handling much larger payloads and generating so much more revenue per launch was clearly a major catalyst for that early stock surge.
Yeah.
So any indication that this key development might face delays, it's naturally going to temper investor enthusiasm.
Right. And so with that, we have this dramatic backdrop, this rapid climb, and now this pretty significant pullback.
Yeah.
Let's really kind of dig into what Rocket Lab has actually accomplished. What strengths do they currently possess? The article does a pretty good job of outlining some pretty notable achievements. Yeah. Yeah, absolutely. And I think it's vital not to overlook their present successes.
Yeah.
The article emphasizes that Rocket Lab has become only the second private company in North America,
Wow.
with a well-established track record of successfully launching rockets for both commercial entities and government agencies.
That's huge.
Yeah, and that's no small feat when you consider the technical complexities and the high stakes involved in spaceflight.
Right, and they've kind of strategically carved out a specific area of the market for themselves, haven't they?
Yeah.
By concentrating on these smaller payloads with their Electron rocket, a segment that, SpaceX, with its focus on larger missions,
Yeah,
hasn't really prioritized.
exactly. I think they've identified a market segment that was, to a degree, underserved,
Uh-huh.
and they've executed their strategy very well. The launch frequency of the Electron is really impressive.
Yeah, 16 launches in 2024, all with a perfect mission success rate.
It's amazing. And, they want to increase the number of Electron missions even further this year.
Wow.
And so that just demonstrates a level of operational reliability and maturity that's really valuable in this industry.
Right.
This focus allows them to cater to that really kind of burgeoning small satellite market, particularly for applications like Earth observation and communication constellations, which is a segment that, initially the bigger players like SpaceX kind of overlooked.
So beyond just the rocket launches themselves, the article highlights substantial growth in their space systems segment.
Yeah.
And this is the part of their business that designs and manufactures components for satellites and other payloads. And it's not limited to their own launches.
Right.
They're even supplying parts for payloads being launched by other companies, including SpaceX, which seems like a smart move.
Absolutely. It's a great way to diversify their revenue streams.
Yeah.
And what's really noteworthy here is the scale of that expansion. I mean, their space systems revenues surged from $172.7 million in 2023 to $311 million in 2024.
That's huge.
Yeah, that's a huge jump.
Yeah.
And that indicates strong demand for their expertise and components.
Yeah.
And it underscores their growing role within the broader space technology ecosystem.
And when you look at the total picture, the combined revenue from both their launch services and space systems reached $436 million in 2024.
Wow.
And the article reminds us that just a few years ago, it was under $100 million.
That's right.
And that kind of rapid revenue growth definitely puts them among the fastest expanding publicly traded companies.
Yeah, absolutely. This kind of upward trajectory in revenue is exactly what often attracts investors to growth stocks.
Right.
It signals robust market demand for their offerings and the company's proven ability to scale its operations effectively.
So now let's turn our attention back to the Neutron rocket, because it really does seem to be at the center of this whole conversation.
It is.
And the article, really emphasizes its importance. It's designed to handle these much larger payloads, and that translates directly into the potential for significantly higher revenue per launch.
Yeah.
At least $50 million per Neutron launch compared to under $10 million for the Electron. So that's a pretty game-changing difference.
It's a huge difference, and it represents a substantial leap forward in their capabilities and their potential market reach. It would enable them to compete for deploying these larger satellite constellations.
Yeah.
And potentially even crewed missions in the future.
Wow.
And so the market clearly recognized this transformative potential, which is why those initial announcements surrounding Neutron's development fueled such a positive reaction in the stock price.
And then we come to the crux of the current concern, which is these potential delays.
Yeah.
And the article points to skepticism surrounding that ambitious development timeline, noting that the complete rocket system is still under development.
Right.
And the necessary launch and landing infrastructure isn't fully in place yet. So that sounds like a pretty tight schedule with a lot of moving parts.
It does. And I think it raises a really important question about, the inherent challenges and risks involved in developing these really complex technologies. And the article highlights the perspective of these analysts at Bleecker Street Capital,
right,
who believe that a delay into 2026 or even 2027 is actually a more realistic scenario.
Wow.
And as the article rightly points out, such delays can have significant financial implications.
Right, because extended development timelines just mean more spending a higher rate of what's often called cash burn.
Yeah.
The rate at which a company is using its available cash reserves, and potentially the need for additional funding. And the article suggests this could come in the form of issuing more stock or taking on more debt,
right,
neither of which are particularly viewed favorably by existing shareholders.
Exactly. And, if they decide to issue more stock to raise capital, it dilutes the ownership stake of those current shareholders, which can put downward pressure on the stock price.
Right.
And then increased debt adds financial leverage and risk to the company's balance sheet.
Right. So the uncertainty surrounding, Neutron's development timeline really does cast a significant shadow over the stock's near-term performance.
It does.
Okay, so now let's kind of dig into how the article approaches this from an investment analysis perspective.
Okay.
And it touches on Rocket Lab's current market capitalization, which is hovering around $9.5 billion. And the article suggests that this valuation already bakes in a significant expectation of the Neutron's successful deployment.
Right.
And its, positive impact on the company's future.
That's a really critical insight, because the market is inherently forward-looking.
Yeah.
And a considerable portion of a growth company's valuation is predicated on that anticipated future performance.
Right.
So in Rocket Lab's case, a $9.5 billion market cap implies a strong underlying belief that Neutron will be successful.
Right.
And will substantially boost the company's revenue and eventually its profitability.
Okay.
But it's important to note that that is an assumption.
Right. And the article then goes on to kind of examine, the challenges related to profitability in the space launch sector.
Yeah.
And it points out that even under a pretty optimistic scenario where Rocket Lab's revenue surges to $2 billion with a healthy 20% profit margin,
right,
that would still only translate to $400 million in net earnings. And based on that hypothetical future scenario, the forward price to earnings ratio would still be in the range of 24.
Yeah, I think what's crucial to understand here is that the space launch business, while undeniably exciting and offering significant growth potential, can also be very capital intensive and characterized by these relatively tight profit margins.
Yeah.
So achieving that $2 billion in revenue and a 20% profit margin, is still several years down the line.
Right.
And involves considerable execution risk across, various aspects of their operations.
Yeah, and then when you contrast that potential future with the present financial realities, the numbers paint a very different picture. The article reminds us that Rocket Lab is currently generating less than $500 million in annual revenue.
Right.
And is still reporting a net loss of nearly $200 million per year.
Yeah, I think this contrast between the projected future financial performance and the current financial situation is really what creates this investment dilemma.
Yeah.
For you as an investor, are you willing to exercise that patience and absorb the potential risks associated with the Neutron's development timeline and the company's overall path to achieving sustained profitability?
So considering all these factors, it's interesting to note the conclusion that the Motley Fool author reaches.
Yeah.
They actually don't recommend buying Rocket Lab stock at this time.
Okay.
And their main rationale is that the current stock price doesn't adequately compensate investors for the potential downside risk if the Neutron launch experiences significant delays. So instead, they suggest adding the stock to a watch list and observing its progress.
I think that's a very prudent and understandable perspective.
Yeah.
The potential upside from a successful Neutron launch is certainly compelling.
Yeah.
But I think the article rightly emphasizes, the considerable uncertainties and risks involved.
Yeah.
And so for investors who prioritize a lower level of risk, waiting for greater clarity on the Neutron's development milestones, might be a more appropriate strategy.
Now, the article does briefly touch on other potential future growth drivers for Rocket Lab.
Okay.
That extend beyond the Neutron, and it mentions their ambitious plans to develop their own satellite constellation with the aim of selling software services.
Interesting.
And it kind of draws a parallel to the Starlink venture at SpaceX.
Yeah.
And that sounds like, another significant opportunity for future revenue generation and profit potential down the line.
It certainly could be. And if we connect this back to that earlier discussion of, Rocket Lab's ambition to become this end-to-end space economy platform, establishing their own satellite constellation would allow them to capture even more value from the services provided in space.
Right.
And potentially lead to much more attractive profit margins compared to the somewhat lower margins typically associated with just launch services.
Right.
However, it's important to remember that these plans are still in the early stages.
Yeah.
And, represent another kind of long-term investment thesis.
So to bring it all together, we've kind of taken a deep dive into this impressive growth that Rocket Lab has achieved with its Electron rocket and its, expanding space systems division.
Yeah.
But, the recent decline in their stock price really highlights just how sensitive the market is to the progress of their Neutron rocket program.
Absolutely.
And, the analysis that we discussed suggests that while the long-term potential for Rocket Lab is definitely there, the current valuation may not fully account for the risks associated with potential delays in the Neutron program and the fundamental challenges of operating in the space launch industry.
Exactly. And I think for you, the listener, this deep dive really illustrates the dynamic nature of market sentiment.
Yeah.
Particularly in these innovative and capital-intensive sectors like space exploration.
Yeah.
And it underscores how closely investors are monitoring these key development milestones.
Yeah.
And the expectations that are set by industry analysts.
Right.
And it also highlights the critical importance of looking beyond just, past performance and, carefully considering those future projections, along with a really, realistic assessment of the potential risks that can impact a company's trajectory.
Right.
And as you pointed out, the comparison to SpaceX's long journey serves as a reminder that building a successful spaceflight enterprise is often a marathon, not a sprint.
And that leads us to a final thought, for you to ponder.
Okay.
Considering the substantial upfront investments and the significant technological hurdles that are inherent in the space industry, and the market's often swift reaction to these potential setbacks or delays, what other seemingly high-growth sectors might be similarly vulnerable to these really rapid shifts in investor confidence based on the successful execution of their ambitious future projects?
Interesting.
It's definitely a question worth considering as you kind of navigate the investment landscape.
For sure.
So thanks for joining us for this deep dive.
Absolutely.
We'll see you next time.
Sounds good. Take care.